Morning, Steve Freed in Chicago with the morning grain comments. Well, today is the August USDA crop report today at 11 o'clock Central Standard Time. In the past, this has been a huge report because it's the first time that the USDA actually goes out, looks at fields, and comes back with data which they think shows what the best size of the crop is as of August 1st. They also have an extensive farmer survey that they send out and get back to see what farmers think of their crop, especially versus last year. The trade is expecting the corn crop to be a little bit bigger than what the government said in July, and that the carryout also could be unchanged to maybe a little bit bigger. The opposite is true in soybeans. The trade thinks that whether it's because of a little bit less acres or because the yield might be a little bit lower, because the crop is late and shorter than normal, actually the soybean crop might be lower than USDA's estimate. The interesting thing about all this is that we're probably trading that already with the November divided by the corn contract ratio at one of the historically high levels. Beans are almost 50 cents above what the normal ratio would be on the November contract. The other issue is weather. Over the weekend there were some scattered showers across parts of the northern part of the western corn belt and across, again, the southern parts. Central areas missed out on some of the rains, and the forecast this week is dry. Temperatures, though, remain near normal to actually a little bit below normal. The big factor is what happens in next week. One map shows a rain moving across the Midwest, the other map shows continued dryness. The concern in the soybean pit would be that this dryness could actually reduce the crop even more from the USDA numbers. So it's also important to look at tonight's crop ratings and see if the USDA brings the ratings down because of either some dryness in the Midwest or too much rain across the southern part of the Midwest. Other news, outside markets, the dollar's a little bit higher. Conflicting news about maybe Greece needs a bailout. The Chinese data is better than expected, and we'll have to see if the Fed continues to stimulate the U.S. economy. So throwing all this in a mix, we would look for the report to be friendly beans, maybe a little bit negative corn, and unchanged in the wheat market. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.